Hello and welcome to the show. Now, big deals are emerging in the liquidity flush tech and digital space, boosted by two primary reasons. Consolidation due to fast evolving online space, which many legacy companies, remember, cannot quickly adopt to, where the pandemic has also played a big role in this shift. And also remember that the second being the hunger of the unicorns to become decacorns of future by beefing up the businesses, especially ahead of their IPO prep work, as the investors have been very generous in ascribing them high valuations. So the outcome is that we are now transitioning into an evolved business model of omni-channel approach, and the lines between the offline as well as the online businesses are blurring fast. To discuss this big transformational shift, I have with me the top management of three companies from the startup world. Let me welcome on CNBC Tv18 Sahil Barua of Delivery, Amrish Murthy of Pepperfry, and Sarbvir Singh of Policy Bazaar. Gentlemen, so good to have you on Big Deal. Now, first coming to you, Sarbvir, of course, it's also the IPO frenzy in the startup and the tech digital space, and you probably are the first one who are going to kickstart this process amongst the panelists. So help us understand, how is this omni-channel approach and the combination between online and offline really is very, very essential as the companies become bigger and have the aspiration of capital market funds?
Sure, Nishad, good to be on the show. I think I'd like to make 2 points. One is the fact that, digital, which was a relatively novel thing, let's say 10 years ago, right, is no longer novel. So 500-600 million Indians are digital. They have smartphones. They are fully aware of what they're doing. So I think the whole concept of who is digital and who is not is over, right? Everyone is digital. The second point is that, initially it was really the early adopters who were buying stuff online or who were transacting online or buying insurance in our case. Now those early adopters have given way to the early majority or late majority, as the case may be. So now there is a lot more people who are there, and a lot of these people are not looking at it only as online or offline. They are looking at saying, I want to buy, let's say in our case, an insurance policy. So it is in our interest to make sure that we are available to them wherever they want us to be, whether it's online where we started or whether we need to be offline, which now we are allowed to do as per our license. So I think that in a nutshell, those are the two reasons that I'm sure are driving this change. One, the fact that everything is digital now. And number two, the fact that as we go beyond the early adopters, we need to be present wherever our customers want us to be present.
That's right. So omni-channel approach, and that is blurring the line between offline-online model. But Sahil Barua, come in on this. It's becoming a very lethal combination where you have the technological advantage, and now a lot of companies are suffering because of the COVID realities and are unable to survive beyond a point, and therefore there are many acquisition targets, and consolidation theme is really picking up fast, where you are backed by a lot of liquidity from the investor class.
Yeah, that's true. As Delivery, one of the things that has been the cornerstone of how we've grown the business is really around technology and engineering. When you look at what's happened over the last 2 years, in fact, logistics companies, not just in India, but around the world, in response to COVID, have struggled to sort of re-engineer and sort of operate in the same way that they were operating pre-COVID, largely because of the absence of appropriate systems, appropriate technology to guide their operations. When I think about 2 years back, a year and a half back when COVID began, what allowed us to go back live within 7 days was really the fact that we were able to pinpoint where there were COVID hotspots around the country. We were able to manage our workforces in all of our large facilities. We were able to identify exactly what essential goods were versus not. And so sort of, technology has become critical for traditional offline heavy sort of brick and mortar companies to survive. I think that part is very clear. And from an acquisitive standpoint, look, from a delivery standpoint, we've never been very acquisitive as a company. But the way we think about it is we will look for opportunities to either partner with companies or to invest in companies where there are capabilities which we think are complementary to delivery, which expand the set of services that we offer to our customers, and that we can quickly sort of make more efficient or scale up through our systems and through our technology.
All right, but let me come to Pepperfry. So Amrish, You know, online, offline, and omni-channel model is something that you thought about way back. You have been present in both. How are you expanding this space to really gain much more market share and also opportunities that the present situation is providing?
So thanks for having me here too, Nisha. So our thesis when it comes to omnichannel has been actually fairly consistent for the last 5, 6 years. Our thesis is that it's the same consumer. She could be at a mall at one point in time. She could be walking on a high street at another point in time, on a laptop at a third point in time, or on a mobile phone at another point in time. So it's our duty as a business to interact with her, whichever way she wants to interact with us. And that thesis has driven our omni-channel forays way back from we opened our first store, a Pepperfresh studio in the end of 2000, in early 2015. And that thesis has essentially allowed us to expand our studio footprint significantly over the last few years. One of the things that's happened, especially I think post-COVID, is, and we all know that I think the pandemic has had a significant impact, not on larger businesses as much, but definitely on small and medium businesses. And I think that's where marketplaces like us come into the mix, where we not only through the last 1.5 years have worked very closely with all of our MSME manufacturers, but we've also launched programs. It's actually a program we recently launched about a month back, which allows for people to set up franchisee stores for Pepperfry across town classes in an investment of under 15 lakh rupees upfront. I mean, and that's a program that's getting significant traction because inherently, I think smaller businesses are learning the value of being associated with a bigger brand, especially during uncertain times, and especially when there are opportunities that consumer segments present themselves, which they haven't been able to make the use of till now. And that's something that's working out. It's working out quite well for small businesses because they are figuring out a method of sustainability, and it overall asserts the importance of having an omni-channel approach. And I think that's something that you will find a lot more of it happen through the course of the next few years as businesses learn to cooperate, and there's a degree of consolidation that happens across businesses, across town class in India.
Right, and lines that are blurring between the online and offline space is much more evident in especially the financial services space as well. So, Sarbvir, how does your license for insurance brokerage really change the game completely as you prepare for the IPO? Was that like one of the very big pitch points because you are now omnipresent through omni-channel approach?
So, Nisha, I would say that the IPO is obviously a big event and it's a defining event from a company perspective. But I think from a business model perspective, I don't think we are doing anything different than we had always planned to. And our license, as you correctly said, now allows us to do things offline, whereas earlier we were only allowed to be online. So it's an enabling proposition. But I must also explain that we have to be very careful because our online model has been carefully crafted to deliver a certain business outcome, right? In terms of how we acquire customers, how we service customers, how we sell policies to them. Now, offline, there are, especially in our industry, there are some serious challenges, which is why Policy Bazaar was set up. There are issues of transparency. There are issues of what kind of, promises that are made and, how we handle that. So for us, it is very important that the customer trust, the main asset of Policy Bazaar is the Policy Bazaar brand that has been built up over the last 13 years. So we have to ensure that we cannot sacrifice the trust the customers are placing in our brand for any short-term business results. So I think it's not really about the IPO. The move offline is about a larger opportunity, which is to say that how can we do better and service more customers in a more trustworthy manner. And that's what you will find us doing, that you will find us making a very methodical and steady movement rather than any kind of big bang approach to hit any numbers in the short run.
No, definitely. In financial services, your brand brings that goodwill and therefore you can expand your businesses. But Sahil Baruai, of course, you're also on the path of IPO preparation. I recently announced investments coming in from FedEx. First of all, tell us the rationale of that and what are the other expansion, M&A acquisition scope that you are seeing at this point of time while you prepare for your capital market debut?
Sure. So I think the FedEx conversation is something that we're still awaiting regulatory approval. The idea is actually pretty simple. For us, it was an opportunity to create a global footprint and to expand access for deliveries customers, both from an e-commerce standpoint and sort of our more traditional brick and mortar customers to global markets. And India is obviously a very large priority for FedEx. It's a market that you can't ignore. And I think in that sense, the deal makes complete commercial sense because it provides access to both sets of customers, ours as well as FedEx's, to leaders in the respective markets. Apart from that, from a technology standpoint, one of the areas that is a clear growth area for us and that we're investing in is launching our own logistics operating system. So it will effectively become a supply chain software business that Delivery will launch. We do think that we're sort of uniquely positioned as a logistics operator to build high quality technology that then becomes accessible to the world. And our partnership with FedEx will allow us to take this platform and an India-centric platform, one that's been created in India, and then really take that to developing markets around the world, which are at various stages of evolution, compared to the Indian market. And so that's one clear area of focus for growth for us, apart from just the fact that we will have a much larger cross-border footprint through this partnership.
Right. So yes, beefing up the business ahead of the IPO has been one of the running themes. So let me ask also the pepper fries plans ahead of that. There have been talks about an IPO plan for you as well. And yes, tier 2, tier 3 penetration is one thing that you're looking at. COVID realities have given you a lot more opportunity. But how is it going to change the game as far as the expansion of your business is concerned, which is required before you go for an IPO? Are we looking at much more consolidation and beefing up of the businesses, and your entry into warehouse? How does that fit into the overall game plan, Ambrish?
So, Nisha, I kind of agree with Selvir. I think that IPOs are really important moments in the life of a business. However, fundamental strategy should be intact, and if you execute well the fundamental strategy, then a great IPO is bound to happen. Keeping that in mind, there are a few pegs that we've built our business on. I think the first is, we've discussed this, was the omni-channel peg, where our belief is that as a brand, as a consumer brand which services customers, we need to service customers in whichever way they want to interact with us. So omni-channel is a key peg. The other thing is the entire supply chain. Now, when Pepperfry had started, we felt that there was a need for a specialized big box logistics setup which delivers to the end consumer. You know that we are in the business of big boxes, we are in the business of furniture, and especially when it comes to big box deliveries, surface transport becomes really important and so on. So we felt the need to invest behind setting up a logistics system, which today actually encompasses more than 30 distribution centers, 3 mother warehouses. We have a fleet of close to 500 vehicles by ourselves. More than 1,500 people work in the Pepperfry logistics setup. And we think that this is something that we will continue to invest in. It's something that gives us unprecedented reach as we service customers across town classes. Right. So that's been the second peg of what we've been doing, and we'll continue to do this as we prepare for our IPO. Then there's this entire thing which you brought up, which is technology. Now, our vision is to be in a world, or to enable a customer experience where a customer never needs to walk into a physical store, even though they want to have a physical store-like experience. Let me describe this a little. Using augmented and virtual reality, we want to get to a place where on your mobile phone, you can actually knock on a piece of furniture and get the same feeling back as to how you would have knocked on wood, or you hear the same thing as the sound that wood would have made. That's truly blurring the lines of online and offline. And that's an area that we're making significant investments behind. Call it our moonshot if you wish. And we think that over the next 3 to 5 years, that's something that's going to be of amazing value to not only us as a business, but to all stakeholders who are associated with Pepperfry in some moment or other. So omni-channel, supply chain, the use of technology to blur the lines, these are things that we are core to us.
Definitely, Amrish. So definitely, Amrish, and nothing looks like a moonshot for the startup world right now with the kind of valuations that are being ascribed. But on that note, I will quickly take a short break on Big Deal, but come back and continue the conversation on the kind of offline and online collaboration that we are seeing now in various businesses. Stay tuned. Welcome back. You're watching Big Deal, and we are discussing the big trend of going phygital on the deal street, which is keeping it alive at this point. And Sahil Barua, we were discussing about the adoption. Technological adoption is one, but your money power and the liquidity that the investors are really giving you is also giving you the benefit of going and adopting the new age technologies and new age ways of delivery as well. Case in point being the drone delivery system. Tell us about that and the other new aspects that you're eyeing at the moment in preparation for this transformation.
Sure. While I'm happy to talk about drones, there are really sort of more near-term technologies that I think we're working on. There are four key areas from a technology standpoint that we're working on at Delivery. The first is one that's already sort of mandated by the government as an area of focus, which is electric vehicles. So not only are we working on inducting more electric vehicles into our fleet, both our last mile delivery fleet as well as our intercity cargo fleet, but also thinking about how do we create the entire sort of electric ecosystem, which includes players from the battery space, the charging ecosystem space, and so on. The second, which is something where we've made significant progress over the last 2 years and is an area which we've been investing in heavily, is in robotics and automation within our large trucking terminals, within our large facilities. So one of the areas that we've sort of envisioned is how do we create a fulfillment center, or how do we create a trucking terminal which has almost no people whatsoever? How do we create one which is completely automated? And we're not just investing in buying automation hardware, we're also actually figuring out how to design it ourselves and then put it out there in production. So that's the second area. The third is in machine vision, which is sort of more a software capability than really hardware and automation. And how do we induct more machine vision into many of the operating decisions that we take? For example, in terms of how to identify products which might be damaged during delivery. How do we best fill our trucks, for example?
Yes.
And the last piece, since you spoke about it, which is drones, we've been working on this for 5 years, both independently and with IIT Kanpur, on developing our own drone design. So we have our own capabilities today in-house with the ability to deliver about 4 kg payloads over 30-kilometer distances.
Yes.
The regulatory environment for this, of course, is still evolving, and we're still trying to figure out.
We still have to see that, Sahil. But one quick question, given the kind of advantage then that you're coming with, more consolidation and you playing the role of consolidator of the legacy businesses can be expected, right?
We keep looking at opportunities. I think we're open to the idea of consolidating the industry, and where there are opportunities, we will. But that's something that's sort of an active discussion at all points in time.
All right. Thanks for that answer. But coming to Policy Bazaar also, when we talk about competition, there is a big thought that is now coming across from many thought leaders that, technology is not going to keep you ahead for too long, because all the banks, financial institutions already have their operations in place. They have a huge database in place. All they need to do is just get on the other side and get the tech platforms in place. How do you think your advantage will play out, especially in insurance sector? Help us explain that. And very quickly, sorry.
Sure. So, Nisha, banks are, as you correctly said, actually, it's their battle to lose. I mean, they have the customers have high degree of trust in them, and they can, do what they want. I think in the insurance space, things are slightly different. We are in the business of removing anxiety, right? People buy insurance to protect themselves, to remove them, to calm themselves. So there, what you find is the industry is not as, customer centric as perhaps it could be. And I think that has been the opportunity that Policy Bazaar has seized. And, we are, if you think about it, we are one of the top 3-4 brands in the insurance industry, not just from a distribution or manufacturing perspective. So consumers don't think of, things in neat packages. They think of whatever name comes to their mind. And we have that position.
All right. So
I would say that it's a different, completely different scenario in banking and insurance, and we definitely have a huge advantage.
All right, thanks for that differentiation. And yes, customer acquisition being the key word for Policy Bazaar. One very quick question to Ambrish. Your competitive edge against somebody like IKEA now coming in. So are you looking at a spree of acquisitions to increase your footprint?
Historically, we've always felt that we can build it. That I think is something that most entrepreneurs think, and we've also thought the same. I think, yeah, I mean, look, there are two things that we would acquire for. One would be if there are capabilities that are coming to Pepperfry, which we today ourselves don't have. We've not really found that many businesses out there where capabilities are so differential from us. The second area is where we would look to acquire is if there's a significant incremental market that we begin to serve. And given how Pepperfry scaled over the last few years, I think we've gotten into incremental markets through our own muscle power and figured out how we can make the most out of them. So acquisitions haven't really been something that we've been very focused on. That said, I think opportunities continue to present themselves. I think it's less now about acquisition. It's more about partnering with businesses which can help us more. And I think the entire approach to franchising, the way we're expanding more than 200 franchisees in the next 6 months, I think those are things that we would look to do as opposed to out-and-out acquisitions of businesses.
All right. So basically, the most important takeaway coming in is that collaboration, consolidation, as well as getting that lethal combination of online, offline space to create an omni-channel business model is going to be the way forward for some time, and liquidity-driven M&A will continue. Thank you so much, gentlemen, for joining us, Sarbvir as well as Ambrish and Sahil, on this discussion. With that, it's a wrap on the show. Thanks so much to all our viewers for tuning in.